In this video, we're going to talk about the best real estate investing strategy that exists on planet Earth. This strategy is the BRRRR. And yes, I'm in Canada, but no, I'm not talking about being cold. I'm talking about making a ton of money in real estate investing with the lowest amount of risk.
You guys want to know the secret to doubling your money? Fold it in half. Crickets.
Today, we're going to talk about the best real estate investing strategy that exists, the BRRRR. I've tried all the strategies, I've done them all dozens of times, and I've perfected the BRRRR, I think, over 50 times now. What is the BRRRR? No, I'm not talking about it being cold in Canada, but it works anywhere in the world. It relies on the fundamentals of basically combining a flip with a cash flowing rental property and putting them together for the most tax advantage, quickest way to build wealth in real estate. In fact, you can easily go from 0 to 10 properties in about a year or two using this strategy. And I used it to go from basically 4 properties to 50 properties in under a year. So it can be done by anyone if you know how to follow the strategy well. And if you like this video, please, I'm asking you to share it around. Throw it on Reddit, throw it on your Facebook, share it on Instagram, share it with your friend who's looking to buy a property, because they're gonna learn something about the BRRRR and they might just make a little bit of extra money. I've talked on my channel about this before. I've done dozens of live streams where I've given specific examples, and today we're gonna go through a real example of how you BRRRR and how the BRRRR works. I don't think I've done a video specifically on this, but you can go back on my channel a year ago where I had the opportunity to walk through the Rosehart real estate snowball, which is basically how to build a huge portfolio in real estate really quick, or to get to financial independence or financial freedom in like under 3 years. So 0 to 10 properties in 3 years, basically using a series of BRRRRs interconnected. And there's a few different criteria that make it slightly different, but the Rosehart real estate snowball is basically the fundamental of the BRRRR on steroids. So what is the BRRRR and how do you use it? The BRRRR method, BRRRR method of investing in real estate. So you've got buy, reno or renovate, rent, refinance the property, and then repeat with the money that you've now pulled out. Let me walk through a real example how you pull out money from a property. That's what the BRRRR method is, tax-free pullout. The pullout method. That's too bad, I can't say that on camera. Or can I? When you're buying, you have to buy smart. And so buy talks about buying the right kind of property for a BRRRR. Now, the right kind of property for a BRRRR is one that's often distressed. It has had bad tenants, it's been neglected, it needs a good renovation, oftentimes cosmetic in nature for the rehab or the renovation. So we're gonna go find a property, and that's exactly what I did. I went and found a property. I've done this now dozens of times, but one example was I found a property and it was $200,000. We had to negotiate very hard for this. It was a public deal on realtor.ca, but we negotiated very hard for this deal. And $200,000 purchase price with an ARV or after renovated value backed up by other comparables we found in the neighborhood at between $310,000 and $330,000. So you're saying, wow, there are properties on this street that are very similar that after being renovated are worth $310,000 to $330,000. But right now we just bought it for 200 grand because the property needed work. We had to evict the tenants, so we had to pay the tenants out. It cost us around $2,000 to pay those tenants out. So we were out $2,000 to pay the tenants, and we had a renovation budget of around $22,000 on this property, a little over 10% of the purchase price. And I got those costs so low because I was very frugal in how I bought a lot of my materials. I was price shopping, cheap drywall, cheap flooring, managing the project myself. And at that time, before I had a crew and a team, I was just bringing in different sub-trades and working with them. So I was often just managing the flooring guys, managing, for instance, the drywallers, and I was even pitching in a little bit to keep the rental costs down. In the beginning of your journey, it can make a ton of sense to jump in and build some sweat equity. I think once you've built enough properties that your time is more valuable than say $20 or $30 an hour work, it makes sense to outsource this BRRRR method. But you can do it either way. Both ways will make you money. So we're all in, $2,000 cash for keys to buy the bad tenants out, then renovate it, $22K. So we're all in it for $23,000 plus our $200,000 acquisition price. Now you could close on this in cash, totally fine to buy this property in cash, or you can put a mortgage on it and then replace that mortgage with another refinance mortgage once you get it reappraised at the higher value. So we've unlocked a ton of value in this property. Now I go and rent this property out. It was actually a property it was sort of a duplex, not a legal duplex, but it had a secondary unit in the property, and we're able to get $1,300 in rent for the upper unit and $1,200 in rent for the lower unit. So we're getting $2,500 a month in rent. And this is actually a little low. We went with really great tenants as opposed to going with like the highest rent we could get, just because we wanted some really stabilized rental income. I bring this back to an appraiser and I say, look at this property that we bought for $200,000 that in the beginning was rented out to a family for $1,400 a month. So rented very low to bad tenants who were neglecting the property and landlords who didn't care about the property's upkeep or curb appeal. Turn this property around, and now we go back to the bank and they come back and they agree. They look at the comparables in the neighborhood, they say, yeah, this property is just like those other properties, and it came back at $325,000. The reason for that, with the BRRRR method, is you're focusing not only on comparables to determine comparable properties in the neighborhood, to determine your after renovated value, or ARV, but also you know that there's an income approach to valuing property. And I know if I get, in my area, $2,500 a month in rent, I know my property is worth at least $300,000. Now, a typical rule of thumb when I'm buying a property is the 1% rule. And the 1% rule basically states that you should look to get 1% of the value of the property back in rent per month. So it would take you 100 months to recuperate 100% of the purchase price in gross rent from the property. That's the rule of thumb I've always used. I have bought some properties at the 1.5% and 2% rule. That's fantastic when you get your money back in 50 months instead of 100 months. But with that sort of rule of thumb, you have strong cash flow, and you can bring that to an appraiser and show them a net operating income statement and say, hey, this is what the property is bringing in rent. Here are the expenses. We have solid cash flow. Therefore, this property is worth, based on a certain valuation on the cap rate. So the cap rate is basically the value to net operating income. And most areas have certain cap rates that they trade at. So you can determine the value of a property without comparables just using the income approach. That's why the renting is so important. You want to get great tenants in there to increase the value of the property. So we get back $325,000 appraisal. Most people would say it's smart for you, Mike, to go and flip that and make a whole bunch of money, make over 100 grand. No, you don't want to do that because you're gonna pay a ton of tax. You're gonna lose most of that equity. You want to keep building cash flow and you want to repeat it and buy more properties. So the tax-free way is to take this $325,000 appraised, go to a bank, go to a credit union, and get a mortgage on it, 80% loan to value. They want you to keep 20% equity in the property. You gotta do it. Can't take it all out, sorry, unless you go to some private lenders and get a second mortgage. $325,000 times 80%. Let's pull out a calculator, get some quick math going here. It's like 260 something thousand if I had to guess in my brain. 260,000, that's a pretty good guess. So $260,000. Now I have a check. When I throw a mortgage on this property, if there's already one on there, they'll write me a check for $260,000, and then I'll use that to pay back the other mortgage, and I'll get the difference. Or if I bought it in cash or used private money, then I would pay back that private money and get whatever is left over. In this case, imagine that I put a mortgage on it and I bought it 20% down. If I had done that, up here, this $200,000 times 20% is a $40,000 down payment. So $40,000 in cash, $160,000 in mortgage. Now I put $23,000 in renovations and cost to evict the tenants. So I'm all in $40,000 plus $23,000, $63,000 of capital has been tied up in this property. Now I get this new mortgage for $260,000. They're gonna pay back the old mortgage, right? So you're gonna have $100,000 left over. $260,000 minus the existing mortgage of $160,000 gives you $100,000. Now you've injected $40,000 in down payment and $23,000 in renovations. So take that cash, repay yourself. You now have zero of your own money and you've got it all back. And this took ideally 120 days. So you should be able to repeat this anywhere from 60 to 150 days, but let's call it 120 days or 3 or 4 months to do this. And you can do multiple BRRRRs at the same time. So you can start building a sequence where you can imagine you can do 10 or 20 of these in a year and build a ton of real money. Now, the difference between that here and here, we've got what, that's 37,000, I believe. So the difference between 100K and 63,000 is 37K. That money is paid to you. So not only do you get a check for 100 grand sent to you when this BRRRR is done, that's yours. Now you're repaying yourself your 63,000, so you have the money you started with back, it's yours, you can have it, and you've made $37,000 tax-free. There's no capital gains tax if you didn't sell the asset. You just borrowed money against it, so there's no tax triggering. You just got a ton of cash money, plus you still have the difference between $325,000 value and the $260,000 mortgage in equity created in the property. So you have $65,000 in equity sitting in this property, and you just got a check for 100 grand back. That's a ton of money. You started with, you've got $165,000 now. You started with, in net worth, you have plus 165,000, and you started with 63. I just taught you how to very simply take $63,000 and turn it into 165. Now do 4 of those. All of a sudden you just made a ton of money. That's the beauty of a BRRRR. Now every BRRRR doesn't always pay you $37,000. An ideal BRRRR gives you all of your money back. And so you end up with maybe like 120,000 cash out instead of 165. But in this case, now I have 37,000 for a down payment on another $200,000 house, and I've got my money back to buy another one. So I go from 1 property to 3 because I can buy 2 more. I do the same BRRRR, and all of a sudden you have 5 or 7 properties. Very quickly, you've got a real estate portfolio that allows you to retire. Plus, let's not forget, even with the new mortgage on here, $260,000, your mortgage payments are approximately around $1,400 a month. So let's not forget that you're still making cash flow after all expenses, property taxes, insurance, all of the other sunk costs related to owning this property and operating costs. You're still probably going to be cash flow positive between $600 and $1,000 a month. So you're getting $600 to $1,000 a month every single month, and you have no money in the project. In fact, you got paid $37,000 tax-free by refinancing the property. So you buy it, you renovate it, you rent it out, you refinance that capital back out, and then you repeat and buy more properties. It's a very simple strategy to make a ton of money investing in real estate. That's why I call it the infinite return strategy, because you can literally get an infinite return. When your capital invested is negative, your return on investment is infinite. You have no money. And a half BRRRR is even good. Like in any market right now, I can go into LA, New York, Toronto, Vancouver. I know people doing it in every major metropolitan that are doing BRRRRs. I see them in the comments. They reach out to me on Instagram. They share with me how they're buying these properties and adding value. So adding value through renovation, adding value through tenant replacement, different things they can do to add value. And most people will get a token 5 or 10% off of the purchase price on the property. Now this does predicate that you know how to find a deal. Not all the deals are gonna be this good. You may have to work to find a really good deal, but even if you don't have the skills, my first property, for instance, was a partial BRRRR. I refinanced out half of my down payment because I didn't know how to do it properly back then. I didn't know how to look for comparables. I didn't know how to renovate cheaply. I didn't have the skills needed, which I can show you on my channel. Join me every single Wednesday. I go live for the Mike Rosehart Show on my other channel, and I walk you through these things. I walk you through the strategies you need to accomplish this. And at the end of the day, I'm gonna do more videos on it so you can do it too. But I think the BRRRR is one of the most attractive real estate investing strategies ever. And in fact, of any strategy I've ever seen in investing, from all the day trading strategies, the swing trading strategies that I've seen, the leverage strategies I've seen, all the buying and selling of businesses, this is the highest return for the lowest amount of risk with the greatest probability of success. So those 3 things together make the BRRRR super attractive. Because you're buying real estate with strong fundamental cash flow, even if you fail, like worst case scenario, guys, oh no, you've got to rent this out and only get $800 or $1,000 a month in cash flow. Let's say your refi fails, you don't get all your money back. Oh darn, you had to put up 60 grand, you're still getting $1,000 a month in cash flow. And you go and you wait for some appreciation, some mortgage pay down, maybe you find another way to add some value and you go back and you refinance that money out. In a recession, you're okay. Flipper's underwater. He's bankrupt because he needs to sell. He's not renting his properties out for cash flow. Joe Flipper is waiting to sell that property, and so they'll go bankrupt. Whereas the BRRRR investor doesn't go bankrupt. They pay no tax, except for on the rental income they're earning, but they pay no tax on the gains that they're making. And it's a beautiful strategy to really grow your portfolio really quick. Here in Canada, we don't have the 1031 exchange. And so when we sell a property, we pay capital gains tax. I think that the BRRRR method is the best way to get around that here in Canada. A huge advantage for everyone who's really investing in real estate here, because we can go ahead and delay paying tax until we sell that asset off. And we can extract all the money out of it just by refinancing or getting mortgages to borrow that money out tax-free and bring it on to the next project. So the BRRRR is super attractive, my favorite real estate investing strategy, and I'm excited to share in the next videos coming up about specific strategies on executing on the BRRRR. How do you find these properties? How do you renovate them? How do you add the value to them? And then I've actually done videos. One of my first videos is how to get a rockstar appraisal on your property. How do you get that finagled refinance to get the most value? Because there's a range here. Some appraiser's gonna walk in and say it's 290. Another one's gonna walk in and say it's 330. How do you convince the appraiser of the value? And so there's a lot of little intricate strategies that you need to be able to pull off to make the BRRRR really effective, but I think anyone can do a partial BRRRR. And so that's where I say you should get started investing in real estate, is find a way to add some value or partner with someone who knows how to add some value to the transaction. Focus on cash flow, but then have the BRRRR as like the 1-2 punch, and you will be making a ton of money in real estate. It's the best way that I know. I'm sharing it with you guys. It's worked for me. It's made me a multimillionaire today, and I continue to operate with this strategy. I know people doing it in every market, pretty much in the world. It's predicated on the fact that you can buy deals for less than market price because the market in real estate is inefficient, which means there are opportunities for retail arbitrage. People say, how do I buy real estate? What should I buy? I say you buy a retail arbitrage deal. Retail arbitrage is just the idea that you can buy something for less than market because the market is inefficient. In real estate, there is no publicly traded market for houses, so you can always negotiate and always get a bit of a deal and find a way to add a bit of value. Most people overestimate the amount of work associated with renovating a property. And I think that it's not near as hard as we think. And because of that fear, we get compensated well. Most people will say, oh, it's a $50,000 reno. You get into it, maybe it's only $25,000 reno. And so there's ways to make a lot of money in real estate. And that's the beauty of the BRRRR strategy. Buy, renovate or rehab, rent, refi, repeat. Buy, reno, rent out for top dollar, refi, and repeat. That's the BRRRR, guys. You can do it. I'm here to help you. Remember, the secret to unlocking a wealthier you is to get a mastery over the 3 levers of your personal finances. And that is spending less, you're spending, earning more, how much you can earn, and then maximizing the difference you've invested. So maximizing returns on your capital. Thank you all so much for watching. I really appreciate it. I keep making these videos for free because I want you guys to be better than you were before. That's the idea, is 1% better. If I can have an impact on your life, I'd like to know about it in the comments, how I could help you. And if I have helped you with this video, I'd like to hear about your strategy that you're using in real estate investing, or if you've put this one to work, let me know how it worked out for you. See you guys all in the comments. Like, share, subscribe.